Pfizer is a research-based global biopharmaceutical company where they apply science and their global resources to bring therapies to people that extend and improve their lives through the discovery, development, and manufacture of healthcare products. Their global portfolio includes medicines and vaccines, as well as many of the world's best-known consumer healthcare products. They collaborate with healthcare providers, governments, and local communities to support and expand access to reliable, affordable healthcare around the world. Pfizer's revenues are derived from the sale of their products and to a much lesser extent from alliance agreements under which they co-promote products discovered or developed by other companies or Pfizer itself. The majority of their revenues come from the manufacture and sale of biopharmaceutical products that are sold in approximately 125 countries. As from 2020, the main focus of Pfizer will be entirely on the development and production of medicines. In the proposed strategic acquisition, Pfizer will take the role of the acquirer. There are two companies that are promising candidates in the pipeline and could be potential takeover targets. First, it's CRISPR Therapeutics, which is one of the most well-known gene editing firms, and the second one is Alnylam Pharmaceuticals, which uses RNA interference to discover treatments for rare genetic cardiometabolic illnesses. Even if Alnylam is also an attractive target for acquisition, they're leading in a different field of interest, as they're advancing a deep pipeline of innovative RNA-based medicines. But CRISPR Therapeutics' gene-based medicines promise potential and make it a more attractive candidate for a potential buyout since Pfizer is now expanding their research in exploring in gene editing. As Pfizer has entered into multiple gene therapy collaborations, each of which are an important part of their continuing effort to build their gene therapy programs and capabilities, both companies were involved in the transaction. Having greater economic power can lead to higher market share, more influence over customers, and reduced competitive threat. And the fact that they're researching in the same sector improves access to materials, suppliers, and tangible resources through this acquisition. At the moment, Pfizer is focusing most of its attention on gene editing and mRNA technologies. The company believes that research in these fields will tackle various therapeutics areas such as genetic and cancer diseases. Hence, Pfizer is investigating ways to rectify genetic diseases through combinations of gene editing and want to strengthen their pipeline by chasing various gene therapy programs. In order to achieve this, it is a strategic move to acquire CRISPR Therapeutics for the reasons of acquiring strategic assets, expanding their pipeline, enhancing knowledge and skills and market position. CRISPR Therapeutics developed an efficient technology called CRISPR-Cas9 gene editing, which makes it possible to correct for genetic deficiencies. And this technology has also enabled CRISPR Therapeutics to develop a new regenerative medicine for rare and unusual diseases. Since Pfizer wishes to gain access to promising therapies and medicine that tackle untreated medical needs, the CRISPR-Cas9 gene editing technology in medicine seemed to meet this demand. Furthermore, Pfizer could acquire another potential strategic asset of CRISPR Therapeutics for pathogen detection, which is the CRISPR-based diagnostics. This acquisition of this potential technology in CRISPR-based diagnostics is of great interest for Pfizer, as one of their essential focus areas is molecular pathology of gene-based diseases. Pfizer focuses on the latter to develop gene therapy programs for genetic diseases, such as the Duchenne muscular dystrophy, and CRISPR Therapeutics is also investigating the same disease, even if Pfizer is in a later phase of investigating it, and the acquisition of CRISPR Therapeutics could still enhance the knowledge of Pfizer overall, but also for the specific genetic disease. In other words, Pfizer could still benefit from the research of CRISPR Therapeutics on the Duchenne muscular dystrophy to accelerate the development of a new gene therapy program. Lastly, the acquisition of CRISPR Therapeutics by Pfizer could ameliorate their market position as CRISPR Therapeutics is one of the leading companies in the field of gene editing, and since this acquisition is about creating efficiency through capturing new information, instead of increasing economies of scale, this acquisition is considered to be vertical.
Now moving on to the financial analysis of CRISPR. First of all, the return on equity. As the table shows, it fluctuated a lot over the past years. This is caused by extreme rises in research and development costs and the relatively nascent state of their treatment catalog and pipeline. Means that they are still making small revenues. However, this is not unusual for a clinical stage biotech company, and the return on equity in 2022 is considered to be healthy. Then moving on to the operating management of the firm, the low level of gross profit margin in 2018 and 2020 is due to minimal revenues made in those years. The same holds for the EBITDA margin and the NOPAT margin. Looking at asset management ratios, the fixed assets are growing. In order to efficiently utilize them, sales should be increased. However, this is expected in the upcoming years as revenues have risen in extremes from 2020 to 2021, and the biotech industry is expected to grow in the future. The liquidity analysis shows that the company is well above the healthy benchmark of one for all ratios. The current ratio has steadily grown over the past 4 years, whereas the quick ratio and the cash ratio have declined. The annual report states that the company's investment strategy is focused on capital preservation, which could explain the extremely high liquidity ratios. It can be concluded that CRISPR is a liquid company, however, high liquidity ratios are not necessarily beneficial. It could indicate that they hold too much cash in hand and don't invest enough, which is a matter for concern, and could explain negative profitability results over the past few years. Then moving on to the solvency ratio, showing the long-term debt management of the company. The solvency ratios of CRISPR Therapeutics show that the company is very healthy financially. The company mainly relies on equity to drive their growth, which comes with low risk. The debt to equity ratio and the debt to assets ratio have been steady over the past few years and very low. These ratios show that CRISPR Therapeutics could be a low risk acquisition for Pfizer. Now, the first part of the financial analysis is concluded with the cash flow analysis. The following two tables show some of the key cash flow ratios, and the following main conclusions can be drawn from this analysis. First of all, the operating cash flow ratio shows that in 2018, 19, and 20, the company did not have enough cash to pay off its current liabilities. This ratio was good enough in 2021. And finally, the free cash flow shows that in 2021 and 2019, the company had enough cash flow available to cover monthly expenses. However, 2020 and 2018 show a negative free cash flow, which could be a potential red flag for acquisition of the company.
To value the company CRISPR, we first had to make the prospective analysis and make the necessary forecast assumptions. Concerning revenue growth, large revenue swings have occurred in the past 4 years. 2021 was a productive year for the company on all fronts. Looking ahead, the company is expected to have a productive next year with continued progress as they enter a new phase of growth. The revenue of CRISPR is expected to grow faster than the US market and also faster than the industry it's operating in, which is 12.3% annually. The revenue growth can be considered high as it's forecasted at 26.4% per year in the coming 3 years. After those years, revenue growth will go towards industry average, decreasing 5% per year. As R&D costs will diminish over the next few years relative to the revenues towards industry average, we expect the NOPAT margin to increase with 2% in 2022 and stay constant in the following years. The trend for CRISPR operating working capital seems to fluctuate each year as a result of different levels of accommodated cash for investments. For this reason, we expect the turnover to follow the same path in the terms of fluctuation, forecasting a lower turnover upcoming year and increase afterwards. We expect the same pattern for the non-current operating assets turnover in the upcoming years with consistent fluctuations. Due to frequent inconsistent fluctuations, it is difficult to establish a trend for the investment assets per revenue. Hence, we will maintain the investment assets per revenue at a constant level for the next few years. According to analysts, the share price is to be expected to go up by at least 9% in the upcoming year, which is expected to stay constant after. No dividends were paid out this year, so we assume no dividends will be paid in the upcoming years. After tax, the expected return on investment we assume will be constant at 6.3%. The after cost of debt, this was the same as the industry average. We expect the after tax cost of debt to remain constant over our forecast period. The debt to capital ratio, we keep in mind the growth of the company, which should result in more debt accumulating, so we assume a debt to capital ratio of 20% in our forecasts. The return on equity is determined using this formula. The risk-free rate used is equal to the yield of US Treasury bonds. For systematic risk, we used a beta of 0.9 and the market risk premium for the US in 2021 equals 5.5%. These inputs result in a cost of equity of 6.85%. Regarding the terminal value, CRISPR is still in the beginning stages of its therapeutic development. Since CRISPR is not yet considered to be in a stable growth phase, and the market has not a good idea of the acquisition value, an exit multiple is used to determine the terminal value. The exit multiple used is the enterprise EBIT multiple and is estimated at biotechnology industry average, which is 11. The multiple obtained is then multiplied by the forecast EBIT in the year 2026 to result in the future value at the end of this year. We calculated the free cash flows for the coming years using our assumptions and also the terminal value. Both were discounted to obtain the present value of CRISPR Therapeutics. The valuation of CRISPR using the discounted cash flow model resulted in our valuation price. However, since CRISPR is still in the beginning stages and given the lot of potential the company has, a significant premium has to be paid. In recent years, many times premiums in the biotech industry have surpassed 100%. And also, when we look at averages and what Pfizer paid as a premium to acquire other firms, we estimate the premium to be at 100% of the valuation price of CRISPR. This secures our final price. As the method of payment, Pfizer has enough cash to finance the deal. In addition, Pfizer seems a bit undervalued and will therefore prefer to pay in cash. Furthermore, the more confidence the acquirer has in the acquisition, the more they prefer to pay in cash, because they believe that the shares will eventually be worth more after synergies are realized from the merger. Considering all this and the potential of CRISPR, Pfizer would prefer to pay in cash for this deal.
As far as for challenges and goals, the first challenge for Pfizer would be the commercialization of the CRISPR-Cas9 technology, as there are still some problems with delivering this technology to the body. Another challenge would be the manufacturing of the drugs of CRISPR therapeutics. So this could also slow down the commercialization of certain drugs. However, a goal of this acquisition would be to expand Pfizer's pipeline and to successfully commercialize the acquired potential drugs of CRISPR therapeutics, but also to find synergy through combining their talents and also increasing revenues. Pfizer is a very large pharmaceutical company with large expenses on research and development, whereas CRISPR Therapeutics is more smaller and focused research and development. So by fusing those two companies, Pfizer could really advance their knowledge by having more focused research and development. However, when it comes to the integration plan from an organizational perspective, it is really important to consider three aspects, which are the leadership structure, the management style, and shared values. When it comes to leadership structure, it is important to have at least one manager, one director, and one scientist from CRISPR Therapeutics on the boards of Pfizer in order to best understand the new gene technology that Pfizer is taking in. When it comes to management style, Pfizer has really made it clear that they have a focus on being a purpose-driven company, especially during the COVID pandemic. So these are the main concepts of management style that need to align between Pfizer and CRISPR Therapeutics for the acquisition to be successful. And also when it comes to the shared values, CRISPR Therapeutics and Pfizer really have a lot of values that align together. And also when it comes to, they also have a comparable purpose in pursuing breakthroughs that change patients' life. So we believe that Pfizer and CRISPR share a lot of general management capabilities and also have similar missions. So we believe that the need for organizational autonomy is rather low, and CRISPR will fulfill Pfizer's goal to get into gene editing. So the board would need to be involved closely in this decision-making process. So the process will actually rather be quick because of the similarities of the firms and also because of the size of CRISPR, which will lend for full absorption of CRISPR therapeutics into Pfizer.
Moving on to the exit strategy, why do we need it in the first place? So, taking part in a merger or an acquisition will always include the risk of not closing the deal. And in case that happens, the company will need an exit strategy to exit the acquisition or the merger. There are many reasons behind the failure of the M&A. Some of them would be the different cultures of both companies, but this is not our case since both of our companies have their headquarters in the US. Another one would be the valuation differences. So, this can be the case if our target overestimates the worth of their company, trusting that the value of their stock will rise in the long run, while Pfizer tries to undercut them. Lastly, the lack of involvement of the owner. So, if the advisor is the only person taking care of the acquisition, the process may take longer, which can lead to slowing the deal and even never closing it. An interesting exit strategy that we considered in this case would be selling the stake of CRISP to a partner or investor. The target company was co-founded by Dr. Emmanuel Charpentier and two others, so we don't have a sole owner, which makes it possible for the stake of the company to be sold to a partner or a venture capitalist, while the company continues to operate normally. It is referred to as a friendly buyer strategy because most of the time the company would sell the stake to a party they trust. So the advantages would be that after it's implemented, the firm will still operate normally with some minimal impacts. Also, since the partner who will buy the stake is trustworthy, there is a high chance that this partner will have a strong interest in the company. The limitations, in the other hand, the process of finding the partner or the investor who will buy the stake in the company may take time and may be challenging. Also, the deal may not be objective and thus less profitable, because selling to somebody that you know may give you the insight to set a reduced price. So, the distortions created by the COVID 19 pandemic generated some potential investment opportunities, and PricewaterhouseCoopers is expecting that M&A investments will reach up to $4 billion in 2022. The opportunities created mainly consist of small and mid cap companies, and this is exactly the case of CRISP Therapeutic, our target. So, to wrap up, from a strategic perception, we said that it's going to be a vertical acquisition, mainly because both companies have the same long term focus. From a financial perception, we analyzed the ROE, solvency, and free cash flows of the company for the last 4 years, and after doing our evaluation, we suggested the final price of the acquisition presented earlier. Closing this deal will enable the combination of the expertise of both companies, which will increase revenues in the long run.